Welcome into a daily editorial here on the KE Report. This is a daily editorial that I am recording before the Fed meeting and overall press conference, so a lot will happen after this, but I am chatting with Jordan Roy-Byrne. And Jordan, I know as much as you read the charts, you do also pay attention to the Fed simply because, you know what, they do still have a very heavy hand in the markets, in a wide range of markets. First comment, though, what are you going to be watching most closely after that Fed meeting in terms of different markets' reactions?
Well, Corey, simply put, I will just watch the price action and see how the charts shape up. But I like to see what happens after 48 hours because you can sometimes get a big reaction after the Fed and it holds up for a day or two and then it goes the other way. So, I mean, looking at precious metals, we're a little bit, if you had to put a gun to my head, I think it's more likely we're probably going to trade lower after the Fed, but that's just a guess. So we'll see what happens. It'll be interesting to see if the Fed really shifts anything here in the market. I mean, in the last couple of days, all markets have been rising, which is interesting. But yeah, it'll just be interesting to see if the Fed, if their decision or their words change anything.
Yeah, we're always just seeing if they take out that word patient or how they adjust expectations moving ahead. But you do make a good comment. Don't get too tied to immediate reactions because we have pretty consistently seen a move one direction in a wide range of sectors and then a complete reversal in about 24 hours afterward. Let's talk about gold, though, because gold is doing very well heading into this Fed meeting. This is also with the dollar still continuing its uptrend, but it's been a bit more volatile or a bit choppier, let's say, in the last couple days. Can you give us an update on what you're seeing within this gold market as we head into the Fed during this uptrend?
Well, the real interesting thing to me is gold against foreign currencies. And another way to look at that is gold multiplied by the dollar. And yesterday, that chart closed at, I want to say, about a 2 year and a 9 or 10 month high. So, and its close yesterday was basically the third highest close since 2013. So there were two closes in 2016 that were higher than yesterday's close, but only a tiny bit higher. Like if that chart were to rise 0.4% from yesterday's close, that would put it at the highest close since 2013. So gold against foreign currencies, historically, that tends to be somewhat of a leading indicator for gold itself. So it's very encouraging that chart is showing that kind of strength. It's slightly ahead of where gold and US dollars is. So that's a good sign. And that to me is the real interesting takeaway, how gold has held up well. We've seen a bit of a rally in the dollar in recent days, yet gold has held up well and it's tested that resistance. It hasn't been able to break out yet. Yesterday and a couple days before, it did rally up near 1360 and then sold off. So I'm not really sure if gold, I mean, I'm skeptical that it's going to break through 1360 and close there in the next couple days, but you never know what's going to happen after the Fed. The net spec position in gold, it's not at an extreme yet. After last week, I had it at 41% of open interest. And just to give you a sense, historically, the peak in 2012 at 1800, the peak in 2016 at 1375, those occurred at roughly 55% of open interest. So we're at 41%. The next reading will probably be a little bit higher because it's delayed by a couple days. So in the last couple of weeks, we have seen a fair increase in spec longs in this market. So that has me a little bit concerned, and it wouldn't be that big of a deal if gold sells off after the Fed and consolidates, and then gets into July, and then the Fed does cut rates, and then gold has a much higher probability of breaking out. So that's what I'm thinking about. Last point on the COT, Corey, is that if you look at the big gold breakouts, which were in 03, 05, 07, and 09, when gold broke out, the COT was basically looking bearish. You had net spec long positions were fairly high. And so conventional analysis would tell you, there's too much speculation in this market. It's not going to break out, but it did. So that's something to keep in mind if gold is going to make this huge breakout in the next couple months, that if it's going to do so, the presence of a large amount of spec longs in the market, that isn't going to prevent it from doing so. So it's interesting. It's kind of a concern, but if gold breaks out, it's not really a concern. So we don't know until after the fact, but those are some things to keep in mind with the COT.
Okay, so a couple more comments regarding the dollar and how gold's reacting to the US dollar. What's your takeaway when you do see all these other currencies or gold priced in all these other currencies breaking out, but the dollar still being relatively strong and restraining gold's breakout? Does that mean that you think that the dollar's due for a bit of a correction?
Well, Corey, more likely than not, it does signal that at some point, as long as the strength gold against foreign currencies, if that continues, that does mean at some point the dollar would decline. Of course, several days ago, the dollar bounced off the 200-day moving average, and dollar bulls got really excited again. But I mean, it still has a lot of work to do to go above 98, and then it's below the highs of several years ago. So the strength as far as gold against foreign currencies, if that continues and we see that break the 2016 high, that would be another, like an even stronger bullish signal. And as long as that continues, then I'm not that concerned about where the dollar is going. I mean, yes, if it continues, more likely than not, the dollar should go lower at some point. But for now, the fact that the dollar, has had this bounce for the last 3 or 4 days, yet gold has continued to trend higher and it's tried to break out, that's a good sign. I mean, that's the kind of relative strength we want to see in gold. We haven't seen that degree of relative strength around the recent tests of resistance when it's been trying to break out. So, of course, it's always interesting. What my comment would be, I like the action that I see in precious metals given the strength in the dollar. Let's see what happens. Let's see if that can continue. And the real key is if gold against foreign currencies can break that 2016 high, and if gold can break that 2016 high. If that happens and the dollar isn't breaking down, then that's a much more significant signal than what we've already seen, which is important and it's healthy, but it's got to take that next step and actually break the 2016 high for us to say, okay, now gold is ready to move. It's completely decoupled from the dollar.
Okay. Now, Jordan, another comment on the dollar. You talked about the spec long position in gold building. We're also seeing the spec long position building in the dollar. So where's the balance here?
That's a very good question, and it's something that has me stumped a little bit. I have to go back and look at the data and figure out when's the last time that both these markets, gold and the dollar, had a fair amount of spec longs, and what happened after the fact. Yeah, it's really interesting to me. I mean, it signals how the two have been trending together recently, because typically they don't. And of course, when a market trends, typically the spec longs move in and they help push up that market, but sentiment gets bullish. It moves in the direction of the trend. So it's a very interesting development. But unfortunately, Corey, I'm unprepared to analyze it much more than that, because I have not gotten a hold of the historic data and analyze that. So I'm just going to have to leave it at there for now.
All right. Well, hey, if anybody has that historic data or has any insights on when we have seen that in the past, please share it with us. Either comment or email me at fleck@kereport.com. Jordan, let's also just wrap it up with talking about the overall breadth within the precious metal stocks, whether we look at HUI or GDX or GDXJ. You've said a couple of times that you would like to see 90% of the stocks over the 200-day moving average. Where do we stand with the breadth right now?
For GDXJ and the Huey, we did in the last couple days, we're in the 70s. I want to say 77% and 74%, although that did not change in the last 2 or 3 days. So checking the data, I was hoping we'd see those push up a little bit more. So the strength in the last couple of days has been unable to push some of the weaker stocks above the 200-day moving average. If you look at the percentage above the 20-day moving average, it's basically 100% in both cases. The percentage above the 50-day moving average, it's in the mid to upper 80s for both the GDXJ and HUI. So that tells me we're seeing good strength from most of the sector. But that being said, in the last couple of days, we haven't seen enough strength to bring more of the stocks up above their 200-day moving averages. And when you look at what percentage of the sector is above the 20-day and the 50-day, there isn't much more room there to go higher. So we're a little bit short-term overbought in the sector. And again, I think it's more likely than not that the next week or so we could trade lower, but you never know how people are going to react to the Fed. So I would just be, I would be a little cautious here and not bet on a breakout because we don't know what's going to happen. So there's nothing wrong with waiting a week or so.
Okay, but isn't that kind of the play when you get up to these levels and when you see a market like gold that's been stopped out at these resistance levels time and time again over that many years, that don't try to play this couple percent for the breakout and then the run higher, almost wait for gold to break out and then take some more positions with tight stops so that you do catch that run further if it does run after breaking out?
Well, I mean, and this is getting into trading. There are, the one side of the coin is you try and anticipate the breakout and buy beforehand. The other side of the coin is you wait till the breakout and then you go long. That's where sentiment comes into play and looking at, again, the COT, that's the best sentiment indicator, in my opinion. Again, that's a little bit stretched, but I think if gold were to correct a little bit, if it had a $20 or $30 correction here over the next week or two after the Fed, I think that would get that spec long position down a little bit and put it in good position to break out when the Fed actually does cut rates in July, if they don't do a surprise cut in June. The other thing on sentiment is the daily sentiment indices for gold, silver, and the U.S. dollar. It's interesting because they're pretty heavily bullish for the U.S. dollar. They're in the 70s there as far as the 20-day average, but the 20-day average for gold and silver there is in the 30s or the 40s. So the last comment I'll make, I mean, going back to what you asked about gold and the dollar both having a fair amount of spec longs, I would guess ultimately that's more bullish for gold than the dollar, because normally when there's a lot of spec longs in gold and you have a low amount of spec longs in the dollar, that's concerning for gold. But we have the flip of that where there's more spec longs in the dollar. So to me, that's less concerning than usual for gold.
All right, Jordan, we're going to wrap it up there. Again, just all eyes on the Fed, and if they change their language, if they change their guidance, we're also going to get an updated dot plot. I know we're all slaves to what the Fed has to say, but at least today we get hopefully a little bit more clarity as to if this July hike is going to come, one that the markets have over 80% priced in. Jordan, great chatting with you. Thanks for sharing some of your insights today.